Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Here's your U.S. markets wrap with me, Huang. And let's take a look at how things shaped up last night on Wall Street. A bit of red on the screen as we saw some of the indexes giving back gains. And stocks are down as investors also passed the latest earnings reports as well as the Federal Reserve meeting minutes. And that, of course, ahead of Nvidia's report card that came after the bell. So taking a look at the regular session, the S&P 500 was down 0.6% at 5,888. The Nasdaq Composite down 0.5%, settling at 19,100 points. And the Dow Jones Industrial Average fell over 244 points, down at 42,099. And to help us out, we've got Yussef Gheriani. He is the Director of Investments and Operations at IHT Wealth Management. Yussef, how are you doing today?
Doing great. How about yourself? Good morning.
I'm doing great as well. Great of you on, and we've got a lot to talk about. Suppose let's start first with what has been on the calendar for the week. Everyone's been waiting for this, which is the Nvidia earnings report card. And looking at it on the surface, they've got a bit of a upbeat revenue forecast, and this comes amidst all the uncertainty and all the talk about how China could weigh on their results. What are your first impressions? Nvidia shares are up more than 1% in the wake of those numbers.
Yeah, what the shares do in tonight or tomorrow, a little bit less material to us than what the overall outlook is for the growth of the company, and more importantly, for the growth of AI in general. If there's one big takeaway from NVIDIA's report, it's that the AI wave, the wave of AI innovation, is alive and well. Investors across the globe are trying to get their hands on as many computing chips as possible. Data center growth is not slowing down, and the CapEx forecasts from some of the big providers remain robust.
Okay, so if we look at the AI play, is it still a Magnificent Seven approach, or are you looking elsewhere for better value?
So we think if you're an investor, you should have exposure to Mag 7, right? You have to start there as a baseline. These are the leaders in AI. They have the most compute, the most money. Teams, a small division at Microsoft is as large as many other companies is going to be in terms of resources and ability to grow and scale. However, there are opportunities across the rest of the S&P 500. Almost every single sector of the S&P 500, they are all using AI to innovate and to expand their margins. Anybody who has a proprietary data set or some sort of digitized customer information is going to be able to use that, whether that's insurance or logistics, you name it. Every single sector is going to be using AI to innovate. That's the next wave. It's not just chips. It's not just software. It's going out and expanding across sectors.
All right, so the AI wave is real, like you've outlined. All right, how much of an impact are you seeing when it comes to the tariff environment? Because we've been hearing from the commentary in earnings season, folks looking quite pessimistic and more cautious, cutting back on budgets, cutting back on hiring. How's that affecting the market outlook?
So there are two different pieces here. There's Wall Street and there's Main Street. People on Wall Street are going to be conservative, but their companies are going to be fine. Their earnings might take a small hit for a small time period, but they're going to have enough cash flow and they have all the leverage in their negotiations. So they'll be okay. They'll be able to adapt. The small mom and pop store, the folks on the corner with the small business, they're the ones who get hurt way harder. They end up losing market share to the big companies during this time period.
All right, how about the economic outlook? We've been talking about recession for the good part of this year. Where is it right now?
Fortunately, the United States comes into this time period from a position of strength. So we think that the United States is pretty well positioned to ride this out. They do have a lot of the leverage in trade negotiations. That doesn't necessarily mean that the trade negotiations have been smooth so far, but we're optimistic that the economy as a whole can ride this out. And the reason for that is because the American consumer has continued to just be out there and spend. It's a service-oriented economy, and until the top decile of income earners really starts to pull back, to tighten their belts and stop spending money, the economy is going to keep on moving. And that's consumers not changing their habits right now because of tariffs.
All right, so against this backdrop, there is also what seems to be a narrative: sell America, look elsewhere for better value. How is this going to play out for markets, considering what you've just outlined, where some companies are going to feel more pressure, especially smaller ones? What do you invest in when it comes to U.S. markets, and should you be looking elsewhere beyond the U.S. right now?
Yeah, it's the first time that the diversified portfolio has really helped people in a couple of years, right? It's been a while since we've been able to say that. But we still believe in American management. We believe that American management, American companies are some of the most innovative and best run on the planet. And a lot of American companies have subsidiaries or divisions in other countries that are going to continue to perform and continue to lead in their local markets. So we wouldn't be so quick to sell. It's been nice if you have an international allocation. It's nice to see that up and outperforming. But innovation, and especially in technology, continues to really lead the way in the United States.
Okay, so we've got this tax bill in the works, and that's going to be, I suppose, some tailwinds for the economy. At the same time, that raises concerns about a deficit. So when you look at your portfolio, how much is it weight on tech and other stuff? What's your allocation right now?
We're overweight technology, even considering how much it is of the S&P 500. We're still overweight there, and the rationale is because those are the companies that not only have innovation runway ahead of them, but who also have the cash flows and have the capital to ride out periods of uncertainty. They are not carrying debt. They have a lot of money coming in the door. If things get bad, they can put that money towards buying back stock. They can defend the stock, right? A lot of other companies don't have that kind of capacity. But to get back to the tax bill there for a second, it needs to get done. It needs to get done. We need to stop messing around with debt ceilings and reconciliation. Get a budget, get it done. Let everybody get back to business. Let us focus on companies and whether or not the companies are innovating and succeeding, as opposed to focusing on politics. That's a game that nobody wants to play.
Yep, hopefully we get that clarity soon enough and markets can move on. All right, we've been in conversation with Yussef Gheriani. He is the Director of Investments and Operations for IHT Wealth Management. Yussef, thanks as always for your time and insights. Great chatting with you.
Thanks. Have a great day. Take care.
All right, catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.